Today, Australian jobs up, unemployment up, but what's under the hood? Hello again, it's Martin North from Digital Finance Analytics. Well, latest post covering finance and property news. The RBA adjusted down the expectations of the level of unemployment across Australia to 4.2% this week, a level that they expect to remain unchanged for at least the next 2 years. Then today, we got the latest from the ABS on this frankly fuzzy series of data, which showed that the seasonally adjusted unemployment rate rose by 0.1 percentage points to 4.1% in January. 44,000 people found work last month, while the number of unemployed people increased by 23,000. In short, the jobs market remained incredibly strong. That said, some of the increase in unemployment reflected more people than usual with jobs in January who were waiting to start or return to work. Indeed, the ABS hinted that the rise in the unemployment rate in January could reverse in February because those who were waiting to start work last month were technically counted as unemployed. Employment in the so-called non-market industries of health, education and public administration grew by 8.9% over the last 12 months to September, the fastest pace since records began back in 1994. And while the three industries are not strictly public sector, they are primarily financed by governments. RBA Governor Michelle Bullock on Tuesday said the jobs market was tight and on some measures getting tighter, as she warned the board was unlikely to lower interest rates again soon after it cut the cash rate to 4.1% from 4.35%. The rise in both the number of people employed and unemployed saw the participation rate rise by 0.1 percentage points to a new record high of 67.3%. That was 0.8 percentage points higher than a year ago and 1.8 percentage points higher than March 2020. This surge in employment and participation at a record high cements forecasts the central bank will not cut the cash rate again anytime soon. The ABS said that the number of employed people grew by 0.3% in January. That's the same pace as the average monthly rise over 2024, but higher than the average monthly population growth of 0.2% during 2024. But most of the rise in both employment and unemployment in January reflected rises for women, with female employment rising by 44,000 and unemployment by 24,000. In contrast, male employment and unemployment both changed by less than 1,000 people. Now, some of this rise in female employment could be a response to the pressure on households trying to get by because of cash flow pressures. The employment to population ratio rose 0.1 percentage points to a record high of 64.6%. That was 0.8 percentage points higher than a year ago and 2.4 percentage points higher than before the COVID-19 pandemic. This change was underpinned by an increase in the employment to population ratio for women. With a relatively large increase in female employment in January, the employment to population ratio rose 0.3 percentage points to a record high of 60.8%. And that was 0.7 percentage points higher than a year ago and 2.9 percentage points higher than before the COVID pandemic. The rise in the number of unemployed women in January also saw the unemployment rate rise to 4.1%, in line with the unemployment rate for men, the ABS said. Seasonally adjusted monthly hours worked fell by 0.4% in January 2025. This again reflected a higher than usual number of people working reduced hours in January, but less so than in recent Januaries. The fall in seasonally adjusted hours worked in January 2025 is the smallest we've seen over the past 5 Januaries, and much more in line with what we saw in the past before the pandemic. The underemployment rate remained at 6% in January 2025. That was 0.7 percentage points lower than January 2024 and 2.7 percentage points lower than March 2020. The underutilization rate, which combines the unemployment and underemployment rates, rose 0.1 percentage points to 10.1%. That was 3.8 percentage points lower than March 2020. In fact, the last time it was around 10% before the pandemic was just before the global financial crisis back in 2008. Looking across the states, the season-adjusted unemployment rate was highest in Victoria at 4.7%, with the NT at 4.5%. It was 4.1% in South Australia. New South Wales was at 4%. Queensland was at 3.9%. Western Australia and Tasmania were both at 3.6%, and the ACT was at 3.2%. So far, the tightening jobs market has actually yet to translate into larger pay rises, though. These figures released on Wednesday, as we discussed yesterday, showing that wage growth slowed to a two-year low of 3.2% in December from 3.6% in September. So the question is this all accurate? Actually, at 4.1%, the unemployment rate is below the RBA's best estimate of sustainable full employment, which it thinks is consistent with an unemployment rate of about 4.5%. And interestingly, Deputy Governor Andrew Hawser told Bloomberg on Thursday that Australia's central bank has still work to do to bring inflation back to its 2 to 3% target and doesn't yet share the market's confidence about the trajectory of interest rate cuts. We have taken some of the restrictiveness away, but there's still work to do to bring inflation sustainably back to the midpoint, he said. So we are not whamming down on the accelerator. We have eased back on the brake a little bit. That is the strategy. But I have to say, are we getting the full story? Well, Roy Morgan Research reported that in January 2025, Australian real unemployment increased 78,000 to 1.6 million, up 0.4% to, wait for it, 10.1% of the workforce, with more people looking for both part-time and full-time work. Overall, they said, employment increased to a record high in January due to a spike in full-time employment, and unemployment increased in January, driven by a surge in people joining the workforce. Overall, unemployment and underemployment jumped 1.1% to 21.4% in January. That's the highest rate of unemployment and underemployment since January 2021, over 4 years ago. Roy Morgan's unemployment figure of 10.1% is clearly more than double the ABS estimate, and it's based on weekly interviews of Australians aged 14 and over. And that included 6,064 telephone and online interviews in January 2025. The underemployed are those people who are in part-time work or freelancers who are looking for more work. So the method and approach matters and is very different from the ABS method. And then we have the question of hiring conditions. The ABC reported that LinkedIn Australia conducted research between November and December last year among 2,000 Australians employed or in full-time or part-time employment. Their data shows that job seekers are applying for an average of 7 jobs per week, leading to overwhelmed hiring managers. Recruiters report a surge of often unqualified candidate applications, and they are also seeing more examples of mid-level to top-tier candidates who are more highly skilled still facing pressure. And they found that 51% of Australians say that they've been ghosted during their job search process. Ghosting, by the way, is a term that's borrowed from the dating world, whereby you meet someone, you think it's going to be great, and then you hear nothing back. And the APAC CEO of Hayes Recruitment Agency, who places around 60,000 people across Australia and New Zealand into jobs every year, said that it's become much more competitive, and stories of job losses will continue to unfold this year. Hayes estimates the unemployment rate will rise only modestly this year, from 4% to somewhere between 4.2 and 4.3%, as lower migration and more aged workers retiring keep a lid on the number of people seeking work. And Chief Executive of the Australian HR Institute said its March quarterly survey of more than 600 businesses and HR managers suggests they're finding it slightly easier to recruit workers, but that going forward, the labour market will remain tight. And interestingly, job openings were up a little. Actually, in 2023, the Institute carried out research specifically looking at employing and retaining older workers. Only 25% of respondents stated that they were open to hiring people aged 65 and over to a large extent, and just over half, of 56%, said they were open to hiring people in the next age group, down, which was aged 50 to 64 years. So the employment picture is much more complex than might first appear. Given the still high migration levels in Australia, there are more people looking for work, and this is putting the squeeze on older, perhaps more experienced and therefore more expensive locals. Second, the continued growth of the non-market sector funded by governments directly or indirectly at federal and state levels means a continued expansion of jobs in specific sectors like the care sector, which are not necessarily improving the poor levels of productivity in the economy. And third, the numbers are a bit wobbly given changes to seasonal factors and also the swapping of the sample groups, as well as their strict definition of who is classed as unemployed. Roy Morgan's alternative model gives a different picture. And finally, the significant gap between Victoria unemployment rates around 4.7% and other states suggests that state policy is also important, and on that measure, Victoria is failing quite badly. So the bottom line is this. Overall, the jobs market will continue to hold the RBA back from cutting rates again, even if under the hood, things are far from rosy. And to that extent, words and figures do indeed differ. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.